Hi, everyone. This is Greg Munroe. I'm the founder and financial advisor here at Morrow Wealth Management. I'm here with my partner, Jon Coughlin, who's a private wealth advisor with us. And we wanted to give you a quick update on this stock market decline. We like to say here in the office all the time that the way to be successful in the stock market is that you have to put up with the temporary declines to get all the permanent ups. So let me say that again. You have to put up with all the temporary declines to get all the permanent ups. And the other thing we also like to say is that you want to focus on history, not headlines. Okay. You want to focus on the history of the stock market, not on the headlines of the current day. Because as we all know, as Winston Churchill used to like to say, is that the farther you look back in history, the farther you can look forward into the future, because history tends to rhyme. And with that, what I wanted to start with was to have Jon walk you through how long historically do these types of stock market declines go for? Jon, can you show the slide that goes through this and walk us through a little bit of that history?
Absolutely. Thanks, Greg. So how long do down markets typically last? This chart here shows that on average, a down market, also called a bear market, on average lasts about 11 months. So funny enough, this down market started on January 3rd of this year. So we're actually about 9 months into this down market right now. When will it end? Your guess is as good as ours. But what this does tell us is that if you go into a severe decline, like in 2007, 2008, where the market was down severely, or 2000 to 2002, that these tend to last on average a little bit longer, about 2 years or so. If it's less than a severe decline, then typically it lasts on average about 7 months. So the good news is from here on out, whether or not this lasts for the next 6-7 months or the next 2 years, you can have some confidence in the fact that 2 years out or so from now, things will be higher. And with that, Greg will take us through the next slide.
Thanks, Jon. A lot of our clients like to ask, how long do you think it's going to take for us to get back to where we were in January at the high point? And a lot of people tend to think it's going to take 5 years, 6 years, they say to us. It'll typically 5 years, they say, or 10 years to get back to break even. But what happens is when these markets end, they tend to snap back pretty quickly, and you tend to make back your money a lot faster than you'd think. So, Jon, if you go down to the lowest thing down there, you're going to see that in a bear market, in a down market that goes down about 25%, which is what we're in right now. The low point was down about 24%. If that's the bottom and the bottom is in, you usually get your money back within 7 months. So if that was the case in this one, our low point was in June, it might suggest that, believe it or not, it's possible that all those declines could be erased by February or March of next year. Now, if you go above that in bear markets or down markets where the market goes down more than 25%, it takes quite a bit longer. On average, it takes about 2 to 3 years to kind of break even. But, 24 to 36 months is not a long time. So it's another reason why you want to wait it out again and go through these temporary declines, although they're tough, to wait for the upside and wait for the lightning to strike, because things can come back pretty quickly. And when they do come back, they can go on for a long, long time, and the party can last for quite a while. That's why you want to hang around. Jon, can you walk them through what happens when the markets start rising again in bull markets?
Absolutely. So hopefully let's get this party started again soon. I know all of us are probably getting really sick of this. So how long do rising markets typically last? On average, the average rising or bull market lasts about 4 to 5 years. So just basic takeaway from this, the good outweighs the bad. Strong market declines, maybe about 2 to 3 years to get back to break even, but a bull market lasts 4 to 5 years. So that's why it's important to ride this out, to try to hang in there for the long-term gains that you get from riding out bull markets.
Thank you very much. If we can be of help to you, please contact either Jon or myself. Our emails are shown below, or you can go to our website as well. We hope that this has been helpful and educational for you, and we'll talk with you soon. Thank you.